Breaking news. Mortgage rates just saw their biggest drop in a year. Hello, everyone. David Hittle here with United Real Estate Louisville. I've got some big news that could affect every buyer, every seller, and every homeowner in Jefferson County. Mortgage rates just saw their biggest drop in over a year, and that is huge. Let's talk about what that means, why it happened, and how you can use it to your advantage. So, what just happened? According to recent data from Freddie Mac and the Mortgage Bankers Association, the average 30-year fixed rate fell this week to about 6.35%, down from around 6.5% just a week earlier. It is the largest weekly drop in a year. The drop is tied to falling yields on the 10-year U.S. Treasury note, which often drives long-term mortgage rates. Also is the rising expectations of more rate cuts, one of which we saw this week from the Federal Reserve, which has shifted investor sentiment, helping push rates downward. But why does it matter? Why does this matter now? For buyers, lower mortgage rates mean more buying power. On a typical 30-year loan, even a quarter or a half percent point drop can save you a few $100s a month or thousands over the life of the loan. For homeowners who are thinking of refinancing, this drop opens a window. If you locked in a higher rate earlier, this could be your opportunity to reduce monthly payments or shorten the term without much extra cost. For sellers, this can stimulate buying activity. Lower rates tend to bring more prospective buyers off the sidelines, especially those who were just barely priced out before. And that could help with demand and reduce the time on market, assuming homes are priced and presented well. So, what should you watch for at this point? Here are a few things to monitor and consider. One, your rate lock timing. If you see lenders offering rate locks or float downs, that could protect you if rates dip further. Number two is credit and financing readiness. Make sure your credit, your down payment, and your pre-approval are in order so that you can move quickly. Number three, get comparisons. Get quotes from multiple lenders. Even with a big drop nationally, your local rate could vary based on the lender, credit score, down payment, and of course, type of mortgage. And finally, what comes next? The Fed is likely to move very carefully. Inflation remains a factor. Any major economic data, such as the jobs report, inflation, or something else, will affect how much more rates can drop. So this may be a good moment to act rather than wait, because future rate drops are never guaranteed. So here's what I want you to take away from this. This isn't just good news. It could be the signal that the housing market shifts into a more favorable mode for buyers and refinancers. So whether you are looking to buy new, sell, or refinance, this drop gives you breathing room to make smarter decisions. If you would like, I can pull up what the latest rates look like here in Louisville and Jefferson County, how much someone with your credit score might save, and whether locking in now will make sense for you. I am David Hittle with United Real Estate Louisville. Let's use this drop. It's one of the better breaks that we've seen in some time to make a move that gets you ahead.